Alright guys, so we have big urgent updates today and it's a story of how the US trade war has officially backfired. Now when Trump unleashed the Kraken, he set into motion big events that have officially hurt both the dollar and the US economy. Now we all remember the big proclamation from the White House. We had advisors from Lutnick all the way to Hassett guaranteeing there wouldn't be a recession. But US GDP has officially contracted in Q1. The US economy has crashed by 0.3% in the first quarter of 2025, and that's January to March, even before all the reciprocal madness. We said yesterday that the economy has one foot in a coffin and we called it. The amount of uncertainty in the US economy is breathtaking. Now contrast that to Q1 last year, where growth was 2.4%. We haven't even seen the main event just yet. But the US is also getting hammered when it comes to global trade settlements. And thanks to the tariff war, countries know that trade with the US will start to dry up. That's what a tariff means. The obvious answer is to do business elsewhere. And as a consequence, the need for dollars will start to drop. But there's still a big sense of denial from Scott Bessent, the Treasury Secretary.
Been in the markets for 35, 40 years. Anything that happens over a 2-week, 1-month window can be either statistical noise or market noise. And we're in this for the long term. And the important thing is that we are setting the fundamentals for a strong dollar, a strong economy, strong stock market, and for investors to know that the US government bond market is the safest and soundest in the world.
Well, what just happened isn't short-term noise. The promise of a strong dollar and a strong economy also isn't coming true. When you decide to tariff the world, they will trade amongst themselves. And without a doubt, China will be a big part of the equation. There's no escaping Chinese imports and exports. And considering how the US has been treating China, do you think Beijing will be eager to promote the use of dollars, or will they start pushing countries to do more bilateral trade in their own local currency? Well, the official numbers are out. China's cross-border trade has reached a new peak in de-dollarization. People and entities in China used the yuan in 54.3% of their cross-border trade last month, and this totaled an incredible $725 billion in March alone. This is horrible for the dollar system, and it is a big wake-up call for everyone, for Americans who just can't afford for the currency to collapse even further. It's important for investors who still believe the US markets are exceptional. Now, the administration has taken a wrecking ball to one of the few advantages the United States still possesses, and that is the dollar. And in this trade war, China has multiple ways to retaliate. Now, the media loves to report on the reciprocal tariffs, China's 125% hit back. Everyone also knows about the ban on critical minerals to the US, and no doubt all those are important. But the biggest impact, by far the longest reaching, is what is happening to the dollar system. This affects the real US economy, which is hyper-financialized today. The US economy has contracted for the first time since 2022, which was supposed to be a recession. Now, the surge in imports plunged US GDP growth by 5 percentage points, which is massive. A decline in federal spending is also weighing on the figure. But consider one big danger facing the US economy that almost guarantees a further contraction in Q2, and that is a continued collapse in dollar strength. If trade with China grinds to a halt, Beijing will have to make up for the shortfall by buying and selling elsewhere. They will trade more with Europe, Latin America, and Asia, and we can bet our bottom dollar that Beijing will tell exporters not to settle in the reserve currency. Everything and anything is now being weaponized. It's misstep after misstep, and China will capitalize on those. If we focus on dollar usage in Chinese trade, payments have reached a record low as well. In Trump's first term, China was using dollars for 70% of their trade settlements, but this has collapsed down to just 41.4% today. And let's not forget what happened in April. Both countries raised the tariff level on each other's economy, 245% on Chinese goods and 125% on US imports. Effectively, US and China trade bearing specific exemptions has grinded to a halt, and you would think that the White House would reverse this mess. Dismantling the China tariffs is a good thing. It helps to save the US consumer by lowering prices, but more importantly, it encourages more dollar transactions. When the US sells stuff and they buy stuff, the settlement currency is obviously the dollar. The US trading with the world, especially with China, actually protects the dollar system. But Besson still believes the US is winning the trade war, so we can all forget about a U-turn on trade policy. We are all going off the cliff thanks to Trump's 40 chess move. It's a very complex game, and somehow we just don't understand the genius behind it.
Is, as I've said many times, I think from the Chinese side, these high tariffs are unsustainable. That I believe that U.S. Buyers did a substantial amount of pre-ordering, and now the factories in in China are having to shut down. And I've seen some very large estimates of potential worker layoffs if these tariffs stay in place. So what I can tell you is the tariffs are unsustainable on the Chinese side, that we have a deficit with them. The surplus country always suffers more, and they sell us roughly 5 times more than we sell them.
But there are financial consequences for the trade war and the world dumping the dollar in transactions, because this will boomerang back on investment demand as well. Consumption will take a hit, and counter tariffs will clobber US growth, company earnings, no doubt about it now. And if you hold US stocks, it's time for a reality check. According to Goldman Sachs, the dump could get even worse. Since the start of March, foreign investors have sold a staggering $63 billion worth of US equities, and by any measure, it's a massive stock market dump. People's 401k and their pension plans have gone up in flames, but the potential for a bigger sell-off is still present. Foreign money accounts for 18% of total ownership in US assets, and the trade war sets up the perfect storm that could see either more liquidations or at the very least less money piling to US stocks. And interestingly enough, the bigger sellers were EU investors this time. So people from Asia and the rest of the world still have money parked in the US stock market, but for how long more? As an investor, whether you hold US assets all boils down to two big questions. Will the dollar continue to fall? Because if it does, then the conversion back to your national currency could very well wipe out all the gains. And the second worry is about the US economy itself. What is the strength of the American consumer? We know investing our money is essential, but the best investment is monetizing a skill or business plan that you have. And that's where you truly have unlimited upside to build your dream life. Now, I started out as an employee before going freelance and now operating my own business. The ability to control my own hours is priceless, and I want the same for you. Starting a business remotely in Singapore and Hong Kong is one of the best decisions you can make, and with Osome incorporation in these tax-friendly regions has never been easier. Enjoy the benefits of doing business in these metropolitan cities with the tax advantages wherever you are in the world. The process is hassle-free and completely paperless. Osome will handle your financial administration, taxes, bookkeeping, and accounting. Best of all, with Osome's easy-to-use platform, you can track your cash flow in real time and stay on top of all those invoices. It's time to manage all your business finances in one single place. No need for multiple apps or tools. Focus on delivering value to your customers and creating new awesome products. Osome allows you to focus on what really matters the most. So free up your time and get your business off the ground in Hong Kong and Singapore with Osome. Get started today and build a business that really matters. Incorporating in Hong Kong or Singapore? Click the link in the description or pinned comment below for 16% off any Osome services. Let's start your business journey today. And now that people have stockpiled cheap imports before the tariffs, will we see a spending collapse from April onwards? All the forecasts we are getting seems to be too rosy as well. The real numbers are worse than all the estimates, which means the coming consumer collapse might be a real catastrophe. Americans today are extremely anxious about job market prospects. 65% of people are expecting higher unemployment, and in the same breath, only 32% of people say jobs are plentiful, the lowest in recent US history. What happens when you expect to lose your job with few opportunities in the market? You start to cut spending down. You begin to save a lot more money for a rainy day. You simply have no confidence left to spend, especially when the price tag of everything is getting more and more expensive. But the story here gets weirder. You would think that there would be a sense of urgency in the White House. There should be at least an emergency broadcast or an announcement to U-turn the tariffs. But that isn't happening at all. We have a weird combination of deflection and denial. It's really crazy. In just 100 days, the US economy has officially entered the twilight zone. In his recent post, Trump is blaming Biden for the stock market crash, and this has nothing to do with the tariffs, at least according to him. He still believes there will be a boom because companies and factories are all moving to the US, and that should mean more employment and greater consumption. But is that really the case? It's important not to drink the Kool-Aid wholesale. Yes, Trump did inherit a mess from Biden. The previous administration, they went crazy with government spending and juiced the entire economy with funny money. But Trump trying to do decades of reshoring in 2 years without tackling a serious challenge is not ideal. He hasn't solved the supply chain issue yet. Input costs into the US are still too high, and as the dollar stays weak or falls even further, this makes imports more expensive. And whether consumers shop domestic or they buy stuff overseas, prices will still go up, which means economic growth could still be stagnant or crash further in Q2. Even after the front loading, here's what consumers are facing. Inflation expectations have flown to crazy high levels. In the next 12 months, consumers expect inflation to hit a whopping 6.5%, the highest since 1981. In the next 5 to 10 years, Americans believe inflation will settle at 4.4%, the highest reading since 1991. When you expect elevated inflation, you'll be terrified of spending, especially when the economy is officially contracting. The knee-jerk reaction is to hunker down and to do massive cutbacks, not exactly good for this consumerist economy. Now would be a good time to stop the crazy tariff war and smell the coffee. Consumers will be facing higher prices even if they stop buying foreign imports. However, this tragedy just seems to be getting worse. The White House economic advisor believes the GDP collapse is a good thing, that we should not believe what we are seeing as the economy burns down.
I got to say just one thing about today's news. That's the best negative print I have ever seen in my life. And the markets need to look beneath the surface of that. We had a 22% increase in domestic investment. That is off the charts when you strip out inventories and the negative effects of the surge in imports because of the tariffs. You had 3% growth. So we really like where we're at now. With respect to China,
Now, he said there's a 22% increase in domestic investment. And even if that's true, there's no certainty of future demand for the production. Because of higher costs, can US products still be competitive globally? How can US exports compete with stuff made in other countries, especially those produced in China? And no, a weaker dollar doesn't completely offset the situation. Because US supply chains are not fleshed out yet, the stuff will still be imported in. You have a weaker dollar trying to import stuff that's facing at least a 10% tariff. Good luck trying to produce competitive stuff. And remember when Biden redefined the recession away in 2022? We called that out and we denounced it. That was wrong. But now Trump is also trying to spin the GDP numbers to look good out there to everyone in the world.
The basis under which we won the election. Core GDP, and this is, you probably saw some numbers today. And I have to start off by saying that's Biden. That's not Trump, because we came in on January, this is the quarterly numbers. And we came in and I was very against everything that Biden was doing in terms of the economy, destroying our country in so many ways. Not only at the border was more obvious, but we took over his mess in so many different ways. Core GDP, removing distortions from imports, inventories, and government spending, was up plus 3% when you add it. We had numbers that despite what we were handed, we turned them around, and we were getting them really turned around. Gross domestic investment was a whopping 22%.
Core GDP, what in the world is core GDP? Trump probably doesn't even know that. He's obviously reading from a script given to him, probably from Navarro or even Besant. Is this collapse really all about Biden? Now, I think the tariff war probably contributes to the collapse as well to a big degree, but at least we know going forward what to expect. We might get another negative print in Q2, but I believe core GDP will still be positive. At least for the dream team, they're going to spin it that way, and that is going to be a massive win, at least in their own minds. But let me know what you think. Will countries continue to dump the dollar in trade? And will the US economy fall into recession in Q2? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.